Welcome back to Talk Tickers. This is the deep dive where we stop skimming the headlines and start reading the footnotes.
We do the heavy lifting so you don't have to.
Exactly. And today, we are locking in on a company that doesn't just, participate in the economy. It basically builds the skeleton for it. We're talking about Brookfield Asset Management, ticker BAM.
It's good to be back. And honestly, calling it the skeleton might be underselling it after this Q4 2025 call.
Oh, yeah.
This felt less like an earnings call and more like a manifesto on power, data, and just the physical limits of the world we're building.
It felt heavy in a good way. And the market clearly agreed.
It did. The stock popped almost 5%.
4.88% to be exact, closing just shy of $50. So the board is green, but before we get into the why, we have to hit the main headline. This was a double feature.
Right. You had a solid earnings beat and you had a pretty major changing of the guard in the C-suite.
A passing of the torch. So you have the numbers, which we need to get into, and then you have this whole narrative shift.
The AI pivot. That's where I think the real story is hiding.
Okay, so let's not waste any time. Let's start with the scoreboard. Q4 2025. What did the bottom line look like?
The headline number is earnings per share. The street was looking for about 59 cents.
And they delivered.
64 cents, a 5-cent beat.
Okay, a 5-cent beat. In the context of a huge, stable company like this, that's significant.
It really is. It tells you their internal machinery is running, tighter than analysts were modeling.
That's a nice surprise. But I want to push back a little on the top line. Revenue came in at $1.9 billion. The consensus was a bit higher, $1.96 billion.
Right.
So technically, that's a miss. Normally, the market hates that, even with an earnings beat. Why did they get a pass here?
That is the crucial question. And the answer is quality. The market looked right past that revenue miss because the margins were exploding.
Okay.
This is all about fee-related earnings, or FRE. This is the pure recurring cash they get just from managing the capital. It's the engine.
And that engine is running incredibly hot. FRE was, $867 million for the quarter? Up 28%.
Exactly. But that's not the number. The number you need to circle, underline, whatever, is the margin on that. 61%.
Whoa, okay.
Yeah.
Let's pause there. 61%. For context, successful software companies, SaaS businesses selling code, they aim for margins like that.
Right.
How is a company managing physical infrastructure assets hitting that number?
It's the power of scale. I mean, once you've built the platform, the deal teams, the compliance, all of it, adding another $10 billion fund costs you almost nothing in overhead.
So every new dollar just drops the bottom line.
Almost purely. That 61% tells investors that this business has massive, massive operating leverage.
Which explains why the board felt so comfortable. They hiked the dividend by 15%.
A huge signal of confidence. You don't do that if you're worried about cash flow for 2026. It shows they see a clear runway for distributable earnings to keep climbing.
Which were also up, 18%?
18% year over year. Correct.
Okay, so the engine is efficient, but an asset manager is like a shark. It has to keep swimming. It needs fundraising. How was the haul?
Record breaking. I mean, just listen to this. They raised $35 billion.
In the full year?
No, in the fourth quarter alone.
Wow.
For the full year, 2025, they pulled in $112 billion. To put that in perspective, that's more than most asset managers even have in total.
And that brings their fee-bearing capital to over $600 billion.
Over $600 billion, up 12%. So, yeah, you look at the slight revenue miss versus a 12% jump in fee-bearing capital and $35 billion in new cash.
Yeah.
You ignore the miss. All the leading indicators are flashing bright green.
The machinery is definitely working. But reading the transcript, I got the sense that asset management is becoming too boring a term for what they're actually doing.
I think so, too.
We have to pivot to the narrative because this call was just dominated by two letters, A and I.
This is where it gets really interesting. For the last couple of years, the AI trade meant you buy NVIDIA, you buy Microsoft, maybe some software company.
It was a software and silicon trade.
Exactly. Brookfield is making a totally different argument. They're saying the bottleneck for AI is no longer the chips, it's physics.
Physics as in electricity.
Precisely. You can get 1,000 of the best GPUs tomorrow. But if your data center can't pull the gigawatts needed to run them and cool them, those chips are just expensive bricks. The grid is the bottleneck.
And this is where the new CEO, Connor Teskey, he brought up this idea of the power island or bring your own power.
Right, like a BYOB party. but for hyperscalers.
So break that down. What does that actually mean?
Well, historically, you build a data center, you call the local utility and say, hook me up. But AI data centers are such massive energy hogs, they can break the local grid. Utilities are now telling these tech giants, sure, we can connect you in 2032.
Which is an eternity in tech. Microsoft can't wait 7 or 8 years for a plug.
It's not a chance. So Brookfield steps in, they own the land, they build the data center, but now they're also saying, and we'll bring the power plant right to your doorstep. They're completely bypassing the public utility.
What does that look like? Are we talking about a coal plant next to the server farm?
No, and that's the key. These hyperscalers have net zero pledges. So Brookfield is using a mix. They explicitly mention nuclear leveraging their ownership of Westinghouse.
Small modular reactors.
That's the long-term play. But short-term, they're talking behind-the-meter solutions. Things like on-site solar and wind with huge battery storage, even fuel cells from Bloom Energy that can be deployed fast.
Behind the meter. Explain that for someone who's not an energy trader.
It just means the electricity is generated and used on the customer side of the utility meter. It never touches the public grid.
So no waiting for the utility's permission?
No permission, no transmission fees, and most importantly, no wait times. It's a private microgrid.
That is a massive value proposition. If I'm Google in an arms race with OpenAI, I will pay almost anything for someone to guarantee me 500 megawatts of clean power now.
That is exactly the bet they are making. Teskey laid out the whole value chain. He said investors used to just fund the building. Now they're funding the racks, the cooling, the power, all of it.
They're capturing rent on the entire stack. Not just the landlord of the building, but the landlord of the electrons.
Exactly. And the capital is staggering. They launched an AI infrastructure fund with a $10 billion target.
And they already have half of it.
Secured $5 billion already. But we have to look even wider. Did you catch the detail on the QAI joint venture?
I did. That's the deal with Qatar. A $20 billion strategic JV.
This signals a whole new phase. We're calling it sovereign AI. It's not just Microsoft and Amazon anymore.
It's nation states.
It's Saudi Arabia, the UAE, France, Japan. They're all realizing data sovereignty is a national security issue. They can't rely on U.S. servers. They need their own domestic compute power.
So you have these huge sovereign wealth funds hiring Brookfield to build out their national AI infrastructure.
And unlike a corporation with a budget, these are strategic national mandates. The check sizes are just different. It makes that $100 billion deployment target they mentioned seem plausible.
It's almost like they're becoming a geopolitical player. But let's zoom out a bit. AI is the sexy story, but they made another move right before earnings that seems unrelated. The Peakstone Realty Trust deal.
Right, for about $1.2 billion. On the surface, it looks like a boring old-school real estate play. Office and industrial parks.
Which seems contrarian, with all the death of the office talk.
It is, but look at the assets.
Yeah.
It's heavily weighted to industrial and logistics, and management framed it entirely around the AI supply chain.
How does a warehouse relate to ChatGPT?
Logistics. You need places to store servers, cooling equipment, all the support facilities, but more importantly, industrial is often just code for land with power access. In a world where power is scarce, buying industrial real estate is often just a way to acquire the grid connection rights that come with the land.
So you're not buying the building, you're buying the permit to plug in.
Yeah.
That's fascinating.
It all ties back to building that backbone. Now, to build all this stuff, you need debt. And we saw their credit business just explode in Q4.
They raised $23 billion for credit in 3 months.
It's the Oaktree business, fully integrated now, and the environment is perfect for them. Banks are pulling back on lending for big projects.
So private credit fills the gap.
Brookfield steps in and says, we'll lend you the money. And because they're real asset experts, it's all asset-backed finance. They're lending against the physical towers, the power line is much safer.
Speaking of who's giving them the money, we have to talk about the private wealth channel. That stat jumped out at me.
A 40% growth in 2025.
Yeah.
But that's not the real story. The holy grail here is the 401k market.
Explain that. Why has the 401k market been off limits to a company like Brookfield?
It's all about liquidity. Your 401k needs to be something you can sell tomorrow. Stocks, bonds, fine. A toll road in Brazil or a data center in Qatar. You can't sell that in 24 hours.
But that's changing.
Management was very bullish on new regulatory guidance. They're working on creating sleeves inside target date funds where maybe 5 or 10% can go into these illiquid assets to boost returns.
If that door opens, We are talking about trillions of dollars.
It is the largest pool of capital on Earth. A 1% shift from U.S. retirement accounts would basically double the size of the entire private infrastructure industry.
It's a huge growth story. But I have to play devil's advocate. Aren't they worried about AI disruption? The idea that AI software will just eat their portfolio?
That was the exact question analysts were hammering them on. Are you buying Kodak right before the digital camera comes out?
Yeah.
And BAM's answer was just definitive.
They basically said, we don't own that stuff.
Right. They put a number on it. Less than 1% of their private equity portfolio is in software or services that are vulnerable to this. Their whole argument is, we own the hard assets.
The pipes, the power, the fiber.
You can't automate a physical stay in a hotel. You can't code away the need for electricity. They're the landlord of the AI revolution, not the worker being replaced.
It's a defensive moat built on physical reality. Okay, let's talk about the people. Bruce Flatt is stepping down as CEO of BAM. Connor Teskey is stepping up. Is the market nervous?
No, not at all. Because Flatt isn't really leaving. He's still chair and CEO of the parent company. But he made a comment that Teskey has been running virtually everything for a few years anyway.
So this is just making the title official.
It's continuity, but it's also a signal. Teskey is the renewable power guy. He's the architect of this whole strategy. Putting him in charge tells the market, our future is power and infrastructure. A very stable transition.
And their 2026 guidance suggests they're not slowing down at all. They see a rebound in transaction activity.
That's the interest rate signal. Now that rates have stabilized, they're saying the deal machine is turning back on. They expect to sell a lot of mature assets, which will trigger those big performance fees.
Okay, we've covered the numbers, the power plays, the capital. Now, it's time to shift gears. My favorite part. We're in the investment committee meeting. You have 2 minutes. Pitch the trade.
Okay, and disclaimer time. This is not financial advice. I am not your fiduciary. This is a role play. Don't go bet the farm on this.
Understood, but give us the pitch. What's the trade?
All right, the pitch is this. The sovereign off-grid arbitrage.
Sovereign off-grid. Okay, I like it. Break it down.
The thesis is simple. The public utility grid in the West is broken. It's slow. It's capped. But AI compute demand is exponential, and it's needed now.
So you have these hyperscalers and sovereign funds with infinite money but zero electricity.
Exactly. And we know the chip trade is crowded. So the alpha is realizing that BAM isn't trading like an asset manager anymore. It's trading like an unregulated utility.
Unregulated utility. Unpack that for me.
Public utilities, like Duke Energy, their returns are capped by the government. BAM is building private power islands for Qatar and Microsoft. They can charge whatever they want because the alternative for the client is having no power at all.
That's the leverage. You want the electrons, you pay our price.
Exactly. So the trade is a pair trade. You go long BAM, but you hedge it by going short or at least underweight the traditional public utilities that are stuck in regulatory hell.
So it's short the grid, long the generator.
Precisely. You are betting that the guy who owns the only working plug socket in town is going to win. And with the sovereign angle, the Qatar deal, you have guaranteed government contracts backing it all. It's de-risked.
The ultimate pick and shovel play, but the shovel is electric, and BAM owns the generator.
And the land. And the capital. It's a vertical monopoly on the physical constraints of AI.
That's a wild concept, but the logic, it holds up. Again, not financial advice, but something to think about.
Absolutely. The market is pricing BAM as a bank. The opportunity is to reprice it as a critical infrastructure provider.
So let's wrap this up. What's the one thing listeners need to take away from this quarter?
The takeaway is scale is a moat. We saw the big beat, the 61% margins, the record fundraising. But the real story is that Brookfield has pivoted the narrative. They've positioned themselves as the engine room for the entire AI revolution.
And in a gold rush, it's always better to sell the pickaxes.
Or in this case, the gigawatts. They're proving that infrastructure is the new tech.
Well, there you have it. Another earnings call decoded. This is Talk Tickers. We read the transcript so you don't have to.
See you at the next bell.